Hello, I'm David Frazier, President and Chief Market Strategist of Frazier and Mayer Research LLC, the providers of Investors Monitor, investorsmonitor.com, and our individual investor service, Frazier Strategic Allocator. We're recording this week's TV show, which we refer to as our Market Insights show, on Saturday, November 12th. Well, wow, big week in the stock market last week. At one point, the Dow futures contracts on the Dow Jones Industrials were down around 900 points during the early morning hours on November the 9th as the election results were coming in. And yet we finished up for the day, for the regular trading day, we finished up with all of the major U.S. stock market indices closing in positive territory. And stocks in general continue to move higher last Thursday and a little bit higher on Friday, at least for the Dow. The S&P 500 index was down a little bit on this past Friday. But the Dow was up, I think it was 5.4%. Let me look. Take a look at my notes. Yes, 959 points for the week. The Dow was up 959 points, 5.4%. And both the S&P 500 and the NASDAQ were up 3.8% for the week. And quite honestly, I'm a little bit surprised because I thought that stocks would move lower in the event, initially move lower in the event that Trump were elected as president. And they did move substantially lower in the futures markets. But I think what happened is, because I was watching the trading action between, pretty much up until around 4 o'clock a.m. on Wednesday, November 9th. And even though futures contracts for stocks were selling off sharply, once Trump made his acceptance speech, which was a very conciliatory speech, I think it caught market participants by surprise. That's when the futures contracts started to rebound. And then he had other positive comments after meeting with President Obama on Thursday. So I think obviously market participants did not expect that and responded favorably to it. But overall, even though I did expect stocks to sell off, and once again, I could claim they did sell off initially in the futures markets, I did not expect them to come back so quickly. But yet I'm really not terribly surprised either, because as for those of you that watched the webinar that I did on October 26th and that read the special report that I wrote about about Trump and Hillary Clinton, called Boom or Bust, that is, which sectors and stocks were likely to perform best under either a Clinton or a Trump administration. I said in that report that even though I expected stocks to move lower for a couple months, if Trump were elected, that a Trump presidency would be extremely positive for the U.S. economy and extremely positive for U.S. stocks over the next few years. So apparently other market participants are thinking the same thing. But having said that, we don't want to get ahead of ourselves here, or that's not the right way to put it. We don't want to chase after stocks. That's usually a bad decision. I mean, my approach is usually to kind of do the opposite of what market participants in general do, and that is when other market participants in the aggregate are very excited, I tend to be cautious, and when they become very somber, that's when I make calculated bets, usually speaking. And we're going to take a look at a few charts here in just a moment, and I'll show you what I'm talking about if you don't already know. Okay, so let's take a look at a few charts here, and we're not going to go into a lot of detail. We're going to keep this pretty simple. But first, we're looking at a chart of the S&P 500 index. As you can see, here's the substantial rally last week, but the S&P 500 closed last week just below this major price resistance level. And that's usually the case when stocks run up to these price resistance level. They'll usually sell off a bit thereafter. And that's what I expect to occur during the week ahead. And not just because the S&P 500 ran into a stock resistance level, but if you look at this line here, this is a price momentum indicator. And when it gets up above 80, and especially when it gets near 100, that's telling us that stocks in general are trading at or that trade during when they were trading during any given day, that they were had moved into substantial overbought territory on a short-term basis. And usually, if you were to look at this line closely, you'll see just similar to our proprietary overbought oversold indicator, then it gets up into these high levels. Let's move this out of the way. That you'll usually see a sell-off, like right in here, right? Well, not there, but oftentimes you'll see a sell-off, and that's also the case. What's really the case for almost any stock or stock market index. But we'll see that the Dow, this is now the Dow Jones Industrial Average, also closed last week at the highest level possible, 100, and that price momentum indicator, it cannot go any higher than that, and that's telling us that the Dow closed last week in substantial short-term overbought territory. And the same for the Nasdaq, even though not in terribly overbought territory, still at a very the price momentum is likely to start to slow regarding the upward movement that we experienced last week. Now let's take a look at some infrastructure stocks that I wrote about in that special report. Let me find those. Just a moment, please. And, as I wrote about in our weekly commentary, we had some big movements too in these infrastructure stocks. There's Caterpillar, Cliffs Natural Resources, huge move in just a week's time. Granite Construction, another huge move. Same with Quanta Services. But all of these stocks also, look at this price momentum statistics, rose to substantial overbought territory. There's Caterpillar, Cliffs Natural Resources, that's a 98 reading. It cannot go above 100. Granite Construction at 100. Quanta Services at 100, the highest level possible. And that's telling us one more time that stocks, these infrastructure stocks, as well as stocks in general, as measured by the S&P 500 index, closed last week in substantial overbought territory. So, that we don't want to be chasing these stocks. We want to be patient. We want to wait for a pullback. We're going to get a pullback. When we get that pullback, if it's enough of a pullback, based on which I'll determine by valuation statistics, and if stocks in general and these infrastructure stocks that I've been following closely, as well as some growth stocks, we'll take a look at those a couple real quick, were to pull back to some key price support levels on light trading volume. Light trading volume important because if the trading volume is light, that means that most participants in their stocks will continue to hold them. That then I'll likely advise you to go in and allocate some of your money to those stocks. One example is Shake Shack, which I've been following for over a year, and has been and it trended lower over the past year, but then moved substantially higher last week. But closed last week also in substantial overbought territory. Another one that I've been following closely is Qalis. Actually moved lower last week, and that's actually looking pretty interesting here. I'll have to do some quick valuation analysis. I might recommend that within the next few days. So I'm going to leave it at that for now. We're not going to chase after stocks. We're going to be patient. We're going to go in at the right time. But now that Trump has been elected, I'm telling you, I'm 100% confident, 100% confident we're going to see huge improvements in the U.S. economy over the next few years. and we're going to see stock prices in general move substantially higher, and we're going to make some good money. So I thank you for listening, and I'll speak with you again next week.